Good day everyone, my name is Jay. So I've been getting a couple of messages from people asking me how I get my directional bias and how to get directional bias. So I just want to quickly talk about it. I know there are probably lots of videos on directional bias online, so I just want to say something since I've been getting a couple of messages of people asking me how to actually get it, that they are finding it difficult to get the directional bias. So directional bias is not actually that difficult. Yeah, it is not that difficult. It is just us just basically applying the same thing we look at for, which is our structure, liquidity, and our PUI. But the difference there is just that this is on the higher time frame. Because when we get those things on the higher time frame, the time that market is going to use to take out that your low on the lower time frame is going to take time when we get it on the higher time frame. So because it is going to take time, we now have opportunity to catch multiple trades in that zone before market takes at that low. So that is basically it here, because we know this is the basic way market normally moves. Market moves like this. In a downtrend, we have this low, we have this lower high, and we have this lower low. So highs are meant to be respected in a downtrend, when which while lows are meant to be broken. So in a downtrend, this low here is meant to be broken, while this high here is meant to be respected. So all we just have to do is what, come to the higher time frame, know, okay, which direct, first of all you have to know which trend is this market going to. Is this market downtrending or is it uptrending? So if the market is uptrending, where is the market currently, and where is that market going to, and where is it coming from? So let's say here, this market have taken out this zone here. After market takes out a zone, market does not just start selling immediately, does not start dumping immediately or start buying immediately. Market needs to pull back after taking out a low, right? So now all we just have to do is what? No, where is that next impulsive move going to begin from? Where is that next impulsive move going to begin from? That is what we need to know. And how we can get that is also applying that same strategy, that same things we look at for, which is our break of structure or a market structure shift, liquidity, then our break point of entry, which is our order block, breaker block, or our key level, whatever. So us just applying those same concepts on the higher time frame, looking for those levels on the higher time frame. So now we just have to know, where is this move going to end? Where is that corrective move? Because this is the corrective move. When the market is pulling back up, is the corrective move, while this one here is the impulsive move. So we need to know where this corrective move is going to end for the major impulsive move to begin. So we want to capitalize off of this impulsive move here. Don't get me wrong here, you can buy in a downtrend and you can sell in a downtrend, but if you are buying, you tend to, like, if you don't really know how to actually get in on that buy, you can get stopped out multiple times before the market will actually make the major move. There tends to be a lot of manipulation when you are trading against the trend. So we just have to make sure that we are always in line with the trend. There's a saying that says the trend is your friend. You have to move with the trend. What is the trend saying? You have to trade in line with the trend. So that is basically, so how I get my directional bias is this. I go to the higher time frame. I look out for zones that could possibly reverse this market. You can have multiple zones in the chart that could reverse the market. So all you just have to do is just mark them out. You have to make sure that those zones are being protected by liquidity, because liquidity is very, very important. So you have to make sure that those zones is being protected by liquidity. So when we get those zones on the charts, we just mark them out and wait for market to get to it. So let's just quickly get in on the charts. Let me show you. So I'm going to use this USD CHF, of course. I've been taking sales on this USD CHF for a while now. So let me just quickly use it as an example. So first thing I did was I went to the daily charts. So this was where I met USD CHF. Hold on. So I met USD CHF around here. So what I did was I just basically went to the daily chart. I like to use the daily or the 4 hour while I'm looking for my directional bias. So what did I do on the daily? First thing I saw that I checked it and saw that, okay, yeah, this market has been selling. Because if you pay attention here, you can see that this here market sold to this place here, pulled back into this other block here, then started selling, right? Good. So I saw that, okay, yes, overall the market is bearish. So what do I need to do? I need to look for a way to sell. Now I saw that I saw that this market took out this low here. So we have gotten a break of structure right there. this market took out this low here. We have gotten a break of structure right here. So remember what I told you guys, that after market takes out a low in a downtrend, lows are meant to be broken while highs are meant to be respected. So after market took out this low here, we had a break of structure right here. So now what happened? The market sold for a while. So after that break of structure, market is definitely going to pull back, which is what I call the impulsive move, the corrective move I mean. So after this break of structure here, what did market do? Market pulled back. Now, why this market is pulling back now, yeah? We have to know where is this pullback going to end and the next correct and the next impulsive move begin from. Firstly, here, we have to mark out, we have to follow on what we know, which is we have this break of structure here, which is the double break of structure, breaking this zone here also, which is a double break of structure here, breaking this one and this one here. So we have the double break of structure. Where is our liquidity? We have this first pullback here, which is this weak pullback here as our inducement here. So which zones do we have for this market to reverse on? Our two POY that we use is our breaker block or our order block. So firstly, there's an order block here. There's a breaker block here, there's a breaker block here, and there's a what? Our order block here. So I like to mark out all the closest zone, all the major zones that are close to that liquidity that this market can actually reverse from. So I like to mark them out. So I mark out this breaker block and the other block. So what did I do? I went down to my next time frame, which is the 4-hour time frame. I was waiting for this market here. All I did was just what? I waited for this market to pull back into this. Since I made the market around here, I was just waiting for it to come back into this zone here for me to now look for my sell. Now, when the market got to that zone, I did not jump in on the sell immediately. I did not set my limit order from there immediately to start looking for sales. No. What do I need to do? What did I do? I waited for market to give me my structure shifts to the downside to fully tell me that, okay, bro, I am ready to start selling now. So we need to get that structure shift for us to actually know that, okay, good, the momentum is actually the power is actually changing from the buyers to the sellers. So that is what we need to see. So what did you see here? Now let's move down to the lower time frame. So we can see, firstly, we can see that this we refine this breaker block here up to this zone here. You can see that after this break of structure here, this pullback already mitigated this zone here. So this was the closest one to this liquidity here. So that's what happened there. Okay. So let's move down to the 30 minutes chart to see how the market reacted from there. So we can see the market did not give us any structure here. What did the market do? It got to that zone. It reacted from that zone. But now market is definitely going to react from those zones, from any other block and any breaker block. But now we have to, the difference is what? How long that reaction is going to last. So you can see that this reaction did not last long. You can see market was just acting like it was going to sell down, but we did not have any market structure shift. So we are not getting in on any trade here. So what did the market do? It pushed up. So when this market violated this zone, I knew that, okay, good, this zone is no longer valid. So what did I do? I took it out. Then I waited for market to come back into this this daily order block here. So when the market got to it, I was waiting for one market to do what, to give me a structure shift. So I saw that, okay, on this, why this market was approaching this other block here, it was pushing up in form of a trend, which is, we have this high, we have this low, we have this high, we have this low, we have this high, low, high, and low, right? So good. So the market was really approaching the form of it. So I needed to see a market structure shift, which was what happened here. You can see when market took out this low here, a market structure shift occurred. So we have gotten our MSS there. Then what do we need to see again? Our liquidity, which is the first pullback. So this is it here. So after the market structure shift occurred, after this market took out this low here, we had our what? Our first pullback, our liquidity. Then the market dropped. Then this to confirm our liquidity, the market dropped. Then after that, we entered. We look for, okay, what do we need to see next, which is our point of interest. So we waited for this market to come back into this other block here. I think this breaker block is visible on the lower time frame. I got it from the lower time frame, from the 2 hours chart. Good. So we can see here After the market structure shift here, this inducement here already did what? It already mitigated this breaker block here. It already mitigated this breaker block here. This is a breaker block here, and this is a breaker block, and this is the other another block here. So all these POYs are here. But now which one, following the rules in picking POY, which one is the closest unmitigated POY to that liquidity? This one here, this first one here has been mitigated. This one here is unmitigated. This one here is unmitigated. So which one is the closest? This is it here. So this is why I picked my entry from here. I waited for market. I set my limit order around here, and my take profit was at this low here. You can see then my stop loss went above that the breaker block, slightly above it. Can see there. So this was my entry. So now for this same entry here, I use the same thing here. You can see how this market was pushing up. We have this low here, we have this high, we have this low here, we have this high here. So when this market pulled back down and took out this low here, what do we have? We had this market structure shifts. You can call it a break of structure, market structure shift, wherever. So this is a market structure shift to me. Then we had this first pullback. This is our liquidity. So after I had this liquidity, I knew that okay, good, to confirm this liquidity here, market needs to pull back. You understand? For us to actually confirm our inducement that it is valid, market needs to pull back at least 50%. If the market will not break, will not take out the low. If the market is not going to take out the low, it needs to pull back at least 50%, which is market pulling back to this zone here at least 50%, then coming to trigger our point of interest. So if we measure this with our FIB2, we are going to see that it is up to 50%. You can see it here. It is up to 50%. This is our trading range from the 0 level to the 1. You can see that this retracement here is up to 50%. So we have gotten our inducement. So that is to show that their inducement is valid. So this POY is actually more visible, more clear on the 3 hours chart. So you can see right here on this time frame here, I got my entry from here. I got this breaker block here, which is the closest POY to liquidity. Then my take profit was down here. You can see it here. So this was the entry here. Then the market here take profit. So after that again, I had this internal market structure shift here. Let's go down to the lower time frame. So I had this internal market structure shift here with this liquidity right here. So there was no proper inducement after this market shifted this, broke this low here. There was no proper pullback here for us to actually say we had our liquidity, our inducement here. So what did I do? I waited for the markets. I waited for the market to pull back to give me some kind of engineered liquidity or something. So the market pulled back into this zone here, then dropped. This pullback here is also up to 50%. If we check it, let's check it from this low here to this high. You can see that it is up to 50%. So we have gotten our inducement there. So I was waiting for this market to come back into this zone, here, but the market did not. What did it do? This was a missed entry. The market went and hit take profits. So it is what it is. So after that, I kept on looking for sell because what? I knew that what? This market has not yet gotten to this zone. Any day I wake up on the chart, what do I need to do is what? Check where is this market currently. At the market gotten to the zone, which is, where is the zone here? Back to the zone here. So it is this zone here, which is this low here. So market needs to do or take out this low. So I'm going to keep looking for sales until market takes out this low here. Because remember what I said before, lows in a down trade are meant to be broken, why highs are meant to be respected. So this is the low here. So market needs to take out this low here before any other thing can happen. So that was what happened there. I kept on looking for sales. Right here, you can also see here, we had this sweep here, we had this market structure, internal market structure shift here. And this is our first pullback here. Our liquidity. So which POY is the closest? We have that breaker block there. I think it is visible on the 3 hours. Yes. So I entered from here. My take profit was around here. It said came up here like this. So you can see it here. This one triggered and hit take profit. I think this one triggered during news and hit take profits. After that, I kept on looking for sales. Even when this guy here, when this market was pulling back up all the way to this level here, I did not panic because what I knew that the market still needs to take out that low there. As long as this market has not yet taken out this low here, I'm still going to look for sell until the market take out that low there. So now what happened here? I did not go and start saying that okay, this level here, this is a market structure shift, or this is a break of structure here, and this is the liquidity, and this is our liquidity here, for me to now go and use this for me to now go and start looking for buys from this other breaker block slash order block here. I did not do that because what, I already understood where the market is going to. The market is going to keep selling until it takes at that low. So when you are taking all this kind of buy, where is the buy going to? Where is it going to? So you have to trade in line with the trend, because when you're trading in line with the trend, you're going to get more better opportunities. So you can see I waited for the market to keep giving me opportunity to sell. I got this break of structure right here with this first pullback here. You can see the break of structure, first pullback here, then which zone is the closest period to our liquidity, which is here. This breaker block here has been mitigated, this one here is unmitigated here. So I use the closest and unmitigated POI, which is that breaker there. So this particular trade here, I actually missed out on this trade here. But if I was active here, this is where I would have entered my trade from here. I missed out on this trade. So when I came back online, I saw that okay, yes, that the market has tapped on the zone already. So I cannot just enter a trade from a random place. I need to get the confirmation entry for me to actually enter this. So which is why I wanted to use this confirmation here. You can see right here, I have this internal market structure shift here. We have this internal market structure shifts here, and this weak liquidity here. Let me label it X. This liquidity and this breaker block here. So I was waiting for market to come back into that breaker block for me to actually take my sell to take out this play. Now if you look here now, you can see that from here to this level here, this is the trend line liquidity the market was using to approach that POI. This is the trend line liquidity the market was using to approach that POI, was using to approach this breaker block here. So market needed to take out this low here. So this could be our take profit here. That's our major take profit here. So we entered from there. This is what I wanted to do, enter from here and take my profit on this next drawn liquidity. But the market did not tap me in and it went and hit full take profit. So after that, there was no other opportunity till this market hit take profit. So after the market hit take profit, what did I do? I know that okay, good, market has gotten to my full take profit. So if you pay attention, I was not looking for anything buys. All this trade here hit take profit. There was no loss on this during my time trading USD there was no loss, no single loss on it, because what, I've gotten my directional buyers. And what do I do? Well, what did I do? I kept on selling until what, market takes out this low here. I kept on selling, kept on looking for market structure shifts, break of structure for me to keep looking for sell. I was not even interested in any buy. There were so many buy opportunity. Right when this guy was around here, I saw that this guy here, this was a good zone to take a buy from. But what, I did not take it. I did not take, cause what, I didn't want to trade against the trend, cause market can actually decide to can actually decide to do something like this, pull back to take out this low here and start selling. Market can do anything it wants to do. So I just waited for the market to come back into my zone, then for me to not take my sell from there. That was what I kept on doing. I kept on looking for sell. So each day I wake up on the chart, I come to the chart and I look, okay, where is this market? As the market got into my zone, no, I keep on looking for sell. I keep on looking for how do I enter for a sell, how do I enter for a sell, how do I enter for a sell, until what, market takes out that low, which is here. So now this is what I'm actually expecting for USD CHF next, for the next major zone that USD CHF can actually drop from. So we already have you can see this break of structure down here. So this is our liquidity here. This is our liquidity right here. So which zone is the closest unmitigated POI? It is this other block here. So this is actually where I'm expecting USD CHF to actually come back to before any major dump is going to happen from. So you can see the pullback is already happening. Like I said before, after market breaks a low, it is going to pull back. You can see market took out this low here. Now it is pulling back. So this is what I'm expecting for USD CHF to spy up into this zone here, then sell to take out this zone, sell to take out this low here. So this is what I'm expecting for USD CHF next. So that is basically how we get our directional buyers. You can see same thing happened there. Market tapped on this zone here. It kept on selling until what? It takes out this low here. So that is it here. Just get your trading range, get your know where that corrective move is going to end. Then what? You keep on looking for sales until market takes out that low. Until market takes out that low. Now you can see, if I was a swing trader here, I would have entered my trade from here, and my take profit is going to be down here. Now, and you are going to see how long did that market take for this market to actually hit this take profit. It is going to take a long time. But since we are day traders, we can actually capitalize off of that market. We can get more opportunity to jump in on that sell on a lower time frame. More opportunity, just like on this place here. I got like about five opportunity to jump in on the sell here. See that market hit take profit one, two. This one missed entry three. This one here four, five. You can see about how many opportunities the market created to just enter for a sell till the market takes a low. So this is what I'm expecting for USD for the market to buy up into this zone here and sell. So let me show you the before and the after of all these trades here. So okay. So this is the first one. You can see this was the before here and this was the after. You can see TP. This was the next one here. You can see the before, the breaker block here. This was the 3 hours breaker block here. You can see the after triggered. You can see the when the market was moving. So this was the third one here. You can see the when the market triggered. This was the entry on MT5. You can see TP. So this was the three of them. So when I was trading USDCHF, I did not take any loss because what I was trading in line with the directional bias. I was trading in line with what the market was doing, which was what? The sell. I kept on looking for sales, kept on looking for sales, kept on looking for sales until what? Market takes at that low. So another reason I am actually favoring this zone here for the next dump is there is a pattern that market normally creates, which is this is a break of structure here. This is a liquidity. The market will pull back like this. Use this breaker block here and sell. Then what will market do? Market after taking out this low, market will pull back up. Then use this other block here and sell again. So now market is not going to use this entry for this breaker block here as liquidity for that other block here. So this pattern normally happens. You can back test it and you're going to see it. So this is just like an additional confluence of what could happen here. And remember, we don't know what the market is going to do next. Market can decide to get that place and start pushing up, whatever. So when the market get there, go to the lower time frame, look for your structure shift liquidity, then your point of view, then you start selling. So when the sale begins, keep on looking for sale till market takes out that low there. That is how to get your directional buyers.